Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, in 2021, IPOs, or also known as initial public offerings, broke records. Over 1,000 companies went public, raising over $300 billion. When money's cheap and expectations are high, raising capital isn't really that hard for companies, is it?
No, Steve, it's not. But remember, the hangover's magnitude usually matches the party's indulgence. So elevated inflation, rising interest rates, and geopolitical tension weighed on markets during the first half of 2022. Yeah. So now we've got more expensive money, and we have vast uncertainty, and that froze IPO markets this year. According to Dealogic data, IPOs have raised only $5.1 billion so far in 2022. What was your number last year?
$300 billion. There's a big difference.
So far below 2021's pace. And the last time we saw IPO deal flow this low, 2009, during the financial crisis.
Yeah, it doesn't surprise me.
Does it? No.
Yes, Travis, risk appetite, it really has dried up. We could be on track for the worst IPO year since Dealogic started tracking this data back in 1995. Many young companies are discouraged by the environment and are probably going to push off their IPOs until 2023 to 2024, which could obviously hinder their growth. As we pointed out earlier, it's a stark contrast to 2021. Remember the SPAC, the Special Purpose Acquisition Companies.
Oh, yes.
We did a video on this last year, and it seemed like every celebrity, every venture capital manager had a SPAC.
Even Shaq had a SPAC. I think so.
Yeah, that's great. And in fact, we had 589 SPACs in 2021. In 2022, so far we only have 27 this year. Big difference. Yeah. Very similar to the $300 billion versus over $5 billion.
Big difference. So, without access to capital, many of these aspiring IPO companies that are going to have to put their IPOs on hold, they're going to have to tighten their belts, reduce costs as they burn through their cash reserves, just attempting to stay afloat until they can get access to capital. However, some will push forward and go public in this environment because they need the capital to grow. Perhaps they have an avenue to do so, or they need the capital to make an acquisition that's going to help the company grow. However, they're going to struggle with much lower valuations than they would expect or would get in a 2021 type of environment, and that will be a bitter pill to swallow for management and founders that have already anchored to that higher valuation number.
Yeah, Travis, in this environment, speculative companies, those that don't make money, they're going to struggle, and it is likely moving forward, private, profitable, fairly large companies are going to lead the way out of this IPO drought as the markets have a tendency to settle down here.
Yeah. So the slowing really halted IPO market is just another sign that the economy is cooling off, which I want to remind people is the Fed's goal at the moment as they battle inflation at 40-year highs. And inflation distilled down to its simplest form is just too much money chasing too few goods, right? Yeah. So it'll be tough, Steve, but next time money is extremely cheap and IPOs are plentiful and SPACs and VCs are all cashing in, maybe you'll even have a SPAC in the next one, I don't know. I doubt it too. Do your best to remember the environment right now and remind yourself that hangover always matches the party.
That's so true, Travis. Look forward to it next week.
Look forward to it as well.